Welcome back. Dr. Hassan Mahmud, Director, Monetary Policy Department at the CBN, is joining me today. Doctor, good to see you.
Good to see you too. Good morning.
Good morning.
Yeah.
Let's get started our series.
Good.
You know, we've been talking about this, and at last it has come.
Yeah.
It's not all the time after MPC. You're always in the news during MPC, but let Nigerians also understand why that meeting is necessary and what are the intricacies of that meeting. So welcome again.
Thank you.
Why is this important? Let me even start from it. Because at the beginning of the show, I did say that today's program is an educational program. Not that other shows are not educational, but this one is like monetary policy 101, or economics 101, so to speak. Yeah. So why is it important?
It is important in the sense that the public, because the decisions that are taken by the monetary authorities are supposed to impact on the welfare of the people. One, you have the investors, the operators within where the central bank operates. The central bank is the highest monetary authority in the nation, but the activities of the central bank affect the rest of the people, the individuals, the households, the consumers, the businesses, all are impacted. It is important that these individuals understand what the monetary authorities are doing, why they are doing it, what they want to achieve by doing that, and what is their own role in supporting that to be achieved. Because even if central bank or the monetary authorities now have their intention or their objectives, they need implementers of those objectives. They need support with other, facets of the economy to actualize that. So yes, we want to fight inflation. Oh, we want to bring down interest rate. Oh, we want to address exchange rate issues. This is central bank's objectives. What is my own role? And if I play that role, what will be my benefit? If I'm not getting the benefit, what are the channels for me to, portray this my non-satisfactory outcomes to the monetary authority? So it is important that when we take these decisions and we speak the big grammars, people really understand why this is being done, what is the objective behind it, because some people can just say, why can't you bring interest rate to even 1%? What's it difficult? Why is it difficult? And so that we can borrow at 1%, why must it be 9, why must it be 10? People need to also appreciate there are other factors that plays in that. So if you understand it, then you will appreciate that, yes, okay, these are the constraints and these are the likely remedies to those complaints. So that is the essence of, allowing people to understand why monetary authorities take decisions they take and what are the expected outcomes from those decisions.
What's this monetary authority? We'll be as basic as possible.
We should.
So what's this monetary authority that you say monetary authority?
Okay, let me even start this way. What is even the monetary policy?
Yeah, I was coming to that, but because of say you were saying monetary authority.
Yes, and I also wanted to clarify that it is also good to clarify that the emphasis when I say monetary authority, I'm singularly referring to the Central Bank of Nigeria. Is the authority that is the apex authority that's empowered to take monetary policy decisions. So the monetary authority means the same thing as the Central Bank of Nigeria. And the activities that they do towards achieving all these objectives is the policy framework. That's the monetary policy itself. And it involves using certain tools within their space. Every tool is not within every. What I mean by tools, certain measures. Instruments is even complicated. Or some measures or some styles or ways of allowing certain things to happen in certain ways. You use some things. If you want to service an engine, you need a 19 screwdriver, plier and stuff like that. So you need to know where to use a plier. You need where to use a 13 flat. You need where to use a screwdriver. Yes. So using those tools, to achieve, a smooth running engine, that will allow your car to move from one place to the other. So those tools, and I'm sure we're going to be talking about them, is what this central bank uses through a channel. And that channel is the banking system and the financial system, through that channel to achieve the general objective, the ultimate goal of employment, output growth, price stability, and all that. So those tools, which we'll be talking about, are what they use. So the process of doing all this is what we call monetary policy process. And then there are underlining factors why this is the way it is. The thinking is, and theoretically, is that the number of money, in economics we call it the volume, of liquidity, the number of money within the economy can be used to affect the prices. And the prices, in this sense, is interest rates, inflation, price of goods and services, or change in the price of goods and services, that is inflation, and then exchange rate, and to some extent, even asset prices in the stock market, capital market. So those are the long-term end of the market. These other prices I'm talking that monetary policy use is to affect the short-term end of the market. The short-term means central bank lends only to banks. Central bank does not lend to individuals. So the rate at which central bank lends to banks is determined by the quantity of money they feel is within the banking system. And so they set that rate to control that quantity of money, because that quantity of money the central bank or the authorities believe it affects the end prices. Leave the goods itself aside, leave the services aside. The volume of that money, that's what we call the liquidity. Liquidity is the volume of money within an economy. But I'm emphasizing that this is the money within the banking system, not the money in the entire economy. Because we were saying, you say there's too much money in the economy, and we're not seeing the money. We're talking of the monies in the banking system and the monies with the central bank, which is called the reserve. Because banks are supposed to keep a proportion. When we do our MPC, we talk CRR.
That's the CRR part,
yes,
which is 27.5.
Yes, yes.
So for every, let's say for every 100,000, what it means is that 27,500
of
the bank's money will be with the
central
CBN.
bank. Yes. It's still for the bank.
Yes.
With the central bank, and we use that one in the case that the money with the bank is finished. You can come and take this money and pay those that are holding the money, because we're the ones that gave the public the confidence to put their money in the banks, because we gave the banks license. So running around the whole thing, that process of using these tools to address prices and other factors to lead to employment generation, or even retaining employment, or even gaining employment, and also improving output growth, both goods and services, is what we call monetary policy. And the authorities, by law, that is given to use these tools to address these factors is the Central Bank of Nigeria. But Central Bank also does it with other agencies of government. Central Bank cannot work without the fiscal authority. Fiscal authority is the central government, the Ministry of Finance, and all those players, and other agents. Central Bank can also not do without the banks, without the financial institutions. So Central Bank will also have to create rules to monitor the behavior of those financial institutions. That's what we call financial sector regulation. So we also have laws and regulations and guidelines that those guys are supposed to follow for us to be able to achieve this our objective of transmitting the changes in this short-term money instrument, the ones I said borrowing to bank, to the lending rate, the deposit rate, the savings rate.
Okay. I want us to go back a bit, because we're talking about CBN, we're talking about monetary authority. I want us to also talk about the mandate of the CBN.
Yeah.
As a monetary authority, the Central Bank of Nigeria, I know some of us may have forgotten your usefulness to the economy, or why you all are significant. And can you run us through, the mandates of the CBN? If we can also put it on air. We actually did our research and put that on air. Yeah.
This is making it a lot easier for me. Yeah.
All right, we can put that on the screen.
The principal and what they normally say is the primary mandate, the most important mandate of the central bank, is the first one you have there. Ensure monetary and price stability. Monetary is looking at money in the whole, monetary aggregates, and I'll talk about. Price stability is largely around inflation. Ensuring that inflation is low, because the assumption is that if inflation is low and stable, it allows your earnings to have strong powers for you to buy the same thing that you are buying or more. The lower the inflation comes, the same money you earn will buy you more things. And secondly, it will also ensure that all the prices that are changing, the change is not too frequent, such that you cannot plan. You buy something, you're also producing something to buy something. Like farmers, when they farm, they don't eat everything that they sell some.
They sell to get
but
money
there are
to
some
buy
that they
other
didn't
things.
farm. they will also go and buy it.
It's not trade by barter.
Yes, so they have to go and buy, maybe you have farming rice and beans, and then you need to buy yam or something like. So while you are selling your own, you are looking at the price of the one you are going to buy. So if you see that the price, if there is no stability in that prices, as you are selling your own, you think maybe the yam I'm going to buy, the price will double. So I'll double my rice. So that behavior distorts the market. It makes the market not to be predictable, and that is not good. So the first measure is to ensure that those prices are stable, they are predictable, they reflect, the goods and services within the economy. It's not because something is scarce, that's why the price is going up. The value has not changed, the quantity has not changed, just because it's scarce. So to ensure that those things are all in place, and then you now get the normal price. The second one is a legal factor, which is the fact that central bank is the only authority in any nation to issue currency. And if central bank issues that country, because the government has empowered, or the law, the constitution has empowered to issue the currency, it is binding on the people to accept that currency. You can't come to Nigeria now with CD. CD is the money they spend in Ghana, and say, I'm going to ShopRite or I'm going to Ebano. You must take this money. It's money that is issued by Ghana. No, it's not applicable here. And you can't take Naira to Ghana that they must collect. So, but so long as it is issued by the central bank, you must take it as a means of settlement of transaction. So central bank is the only one authorized to do that. Because if you allow everybody to issue his own currency, then you have confusion. And that's why we had issues with cryptocurrency. Cryptocurrency is people issuing their own money and you using it, around the world. And that person doesn't have any authority. That person does not pick anything down.
It's not backed by
It's not backed by, well, central bank can print the money. So even if there is an issue, it's the only one that is allowed to go to the printing press and print money. That's why if we see people do this fake money, we arrest them because they don't have that right. It's only central bank. So it is the issuers of the legal tender, which is the currency, and this time around the Naira. Anything that we need to do around changing the Naira or whatever is still the central bank consultation with the president that will do that. Maintain the external reserve. Our currency, we trade with other economies in the world. So we also need to have a currency that is appropriately priced for you to effectively buy from other countries around the world, or exchange that your currency for another currency to buy something like. So around the exchange rate, you need to have that foreign currency to be able to give to Nigerians that want to buy things in other currencies. So the central bank is also to ensure the stability of this domestic currency against this international basket of currencies, such that our currency is not rendered useless or is not rendered valuable for us to buy other things, because we need to import certain things. No country in the world that does not import. We need to also export. If we export, we have a gain. When we bring those gains back, we should be able to have the value of that money that we brought back, if not more than our own currency, not below our currency. So you don't sell. So central bank is supposed to ensure that that is also sustained. Promote sound and
a sound financial system.
These ones were add-ons, that came later because we saw how the nemesis of this was maybe
banking consolidation.
The crisis we had, maybe starting from 2000, 2001 global financial crisis. We realized that those banking institutions can bring down an economy, and so there was a need to ensure that, because if that system is not stable, all these things we're saying, we're doing them through the bank. The interest rate, all those movements that you do it through the banks. If those banks are not stable, then the entire process collapses. So it is part of the mandate of the central bank to ensure that these banks are stable. And how do we ensure that? You create rules and regulations for them to follow. If you want to lend, you need to do this, you need to do this. If you want to do this, guidelines of how they are supposed to operate, and the things that if they do, we're going to penalize them or we'll charge them, or things that if they do, we'll encourage, So there's within that's their own constitution of how to operate. Central bank must ensure that those banks comply, because these are individuals and private businesses that have their ultimate goal of profit maximization. Yes, so if you don't control them, everybody will just, so we need to, bring some sanity into that space. So that's ensuring financial system stability, so that you can implement your monetary policy tools. Fiscals can also do their own, and then you can achieve your ultimate goal. The last one is bankers to government. which means that in the event that, government saves, like the external reserves that we hold on behalf of government, the activities of government, payments of government, we do that, and also we are the lenders of last resort, meaning that if banks have issue, for example, a very raw example is that the money of a bank finishes. The central bank's role to give that bank the money to be able to pay their customers. And a back end will resolve how we'll settle it. It's not that we'll just give you the money for free because you just went and spend your money away like that. No, but because of the end customer should not suffer and your business should not collapse, we'll give you the money like a loan, and then come back and say, okay, what are the things that you have, assets, treasury bills that you have, we'll hold, we'll sell them. Maybe you'll not be able to sell them overnight, but your customers are waiting.
Was created
yes.
to take back that
yes,
bad
that's another good
part
example.
of
yeah.
what
So we'll
CBN
now pump
did.
the money into the bank, and then you will not, people outside will not know something is going on. But backdoor will resolve that and ensure that the system is stable. And that's what gives what we call confidence in the financial system.
Okay.
So I think those are the 5
Yes.
critical. Then the last one, which is not part of this, is also to facilitate developmental roles, in the sense that the central bank is to facilitate development in an economy, including supporting aggregate output growth and also supporting aggregate demand. So you see the central bank going, the last role that we do in agriculture, anchor borrowers, they are all within that development finance role of the central bank. So those are the 5, 6 basic mandate of the central bank.
Of the central bank.
Yeah.
Okay. What's coming to my mind now? Okay, the vision of the central bank just came to my mind.
Yeah.
And is to be a people-focused central bank.
Central bank. That's principally
That's your
a
vision.
coined by this governor. The current governor of the central bank. Yes, the vision is to be the best in terms of ensuring monetary policy stability. Be best global standard in terms of achieving that using your various tools within your space. But the emphasis on being people's focus is purely more of Emefiele's mantra. Yes, when it came in the sense that we do monetary policy or central banking based on theories and money supply and all that, and at the end of it you said, okay, there's too much money within the economy, we're tightening, but people are not seeing the money, people are losing their jobs. Said whatever we do, we should emphasize that the ultimate goal is that the lives of the ordinary people, I'm not talking of the big guys, Dangotes and Kona, we take care of them, but the ordinary people that don't have anybody in government, that don't have anybody in the banking system, their life is not worse off. So the emphasis is on those people, and that's why it's people's focus.
Okay, because this is an educational series, I don't want to go into all the other things we normally go in, because I know that normally I would have taken you up on some of the things you have said, but this is purely an enlightenment series on monetary policy. So we talked about earlier some of the tools. Can you take us through some of the instruments that the CBN uses or the Monetary Policy Committee uses, to gauge and also to, align
things within the economy? Now, the background to it is that, that's what I emphasize, that the belief is that the quantity of money within an economy determines the behavior of prices. And prices have 3 components: the interest rate, the changes in prices over time is called inflation. Yeah, and then you have the exchange rate. We know when we talked about the mandate, we talked about ensuring price stability, external reserve, the external value of your domestic currency, it's important. And so those 3 objectives have tools that you use. And so the principal one I'll start with is the interest rate. The central bank has what they call the monetary policy rate. That is the rate at which the central bank lends to commercial banks or merchant banks, whatever the case may be, or the rate at which those banks can come and borrow from the central bank. And this rate has, like what is going on now, because of developments over time, has a range. They call it the corridor.
Asymmetric corridor.
Yes, asymmetric. Asymmetrical in the sense that they are different. They are symmetric if it is plus minus 20 basis or 200, but if it is plus 200 minus 700, that is asymmetrical. So those boundaries is at the rate at which you deposit and the rate at which you borrow. If you want to borrow, we'll put a margin. If you want to deposit, you will expect a margin. So, but that one is a bit more technical. Let's just face the fact that the central bank has a rate at which it lends to bank. The purpose of, so we call it MPR, monetary policy. We used to call it MRR, monetary, is it discount rate?
I think even different central banks have different names
yes,
for
yes.
it.
We call it, America call it Fed fund rates.
Yes.
Know?
As we call it MPR.
MPR, monetary, even us too, we used to have a minimum discount rate, MRR. That's what we used to call
discount
it before.
Rate, some lending
so
rate, lot of.
So that rate is the rate. So the purpose of that rate is that if I lend to commercial bank at 7%, that means any rate that the commercial bank will lend will be a margin on top of this 7%. The commercial bank cannot, because it doesn't have its own money, it has the central bank money or people's money. The money it has was gotten at a cost of 7%. So it can only, if it wants to continue as a business and earn profit, it can only add 100% 100 basis point, 200 basis point, whatever basis point on that. So whoever is outside will know that I cannot borrow less than this rate, And then if you also want to save, you also have the plan in your mind that, okay, if central bank is giving these guys at this, if I'm going to save, what will I get? So that rate, the central bank uses it to change the behavior of the rates in the markets. I know you have a lot of questions in that area, but let the people understand. Let the people understand it first, that is the purpose of that rate. Yeah. So that is one tool that central bank used to change the behavior of interest rate. So if that rate goes up, we expect that lending rate and other rates in the market will go up. So also supposed to be the deposit rate is supposed to go up because the cost of fund is now a lot higher. So to keep your fund there, there's what we call the opportunity cost of spending, using that money now and making the gains. Keeping it there, you must have a margin to hold your money there. So that is the purpose of the MPR. The other instrument we use to, control the volume of money so that price stability and monetary stability can be achieved is what we call the open market operation. And the open market operation is central bank, selling an instrument, a paper, you call it in Nigerian NTBs, or the central bank one or the government one, which is the treasury bills that you buy if government wants to raise money, but we'll come to that. The open market operation is a process of where the central bank either sells that instrument to banks, which is that certificate, we call the instrument, and collects naira from them, or collect naira from banks and give them that instrument. What it does is that instrument is just a paper. If you give it to the banks and collect money from them, that means those banks are holding that instrument. It's as good as money, but it's not money. But you have removed that naira away from the banking system. So they don't have it to spend or to lend or to hit the FX market. Just to control money market. And if you are seeing that the money in the system is drying out and interest rates are going up, so you just tell the banks, I'm going to sell this certificate to you, buy it from me, and I'll give you naira. So the banks will now return those certificates to you and give you naira. So you have the open buyback. Open buyback means that I'll give it to you with an open agreement that I will take it back, So you have that, but then you have the overnight call rates, yes, and all those ones. So in that corridor, we also have, using this MPR, we also have what we call the standing lending facility and the standing deposit facilities, which also has a rate in terms of, but these are interactions between the banks and the commercial bank. There are several other instruments too that are still being used within that space to control, this volume of money and by extension affecting others. The CRR that you mentioned is also a measure such that if you see that the monies that the banks are having in their vaults is a lot too much, you can increase the CRR. If you increase the CRRs, that means those banks will have to bring that money higher volume, yes, to the central bank. But because of events that comes up recently, we've also, and we wanted to expand credit to the rest of the economy. The argument is, why keep all this huge amount of money with you and people are looking for loans around there? So we ask banks that in the event that the money with you is finished, this regulatory or statutory money that you need to keep with us, we can give it to you to lend to promote. We have to see those projects. You know, we don't want to lend it, to give it back to you to go and start buying FX that you don't need and start, you know, bringing about depreciation or investing in other things that are not your business. So we also have that CRR. We also have what we call liquidity ratio. That is the volume of liquidity a bank is. All of them are all centered around.
That's the volume of money?
Yes, that's what we have at 40%. That is 30% now.
30%.
Yes,
that's
the liquidity ratio. Says that's the volume of liquidity you're supposed to have within your vault. You know,
as
to
cash.
meet, yes, to meet or cash or close to cash.
Okay, yeah.
That you use to meet your daily needs. So that will be a function of your level of exposure and the capacity of your bank. So, but the minimum central bank will give you that you must have this as liquid assets within your portfolio, that you'll be able to meet your immediate needs, so that you don't come to a bank and they tell you that, sorry, we don't have cash. When it gets to that, it's a signal that something is going wrong, and central bank do not want any financial institution that you should know the volume of at least a rough estimate of what is your current account balances, what is your savings or term deposit balances, what is the likely volume that they will come and take in a day. You know, everybody will not go to bank every day, but at least over time you'll be able to have some simple calculation to know that at least within a day. That's why so long as you go to bank, you get your money.
So that brings me to the issue, what you just said about calculation. Does the CBN, you know, look at the financial system on a daily basis in terms of even calculating all of this, your department and some other departments within the bank? How do you monitor all of this? You know, that's first. Then the second question also is, I know that the MBS monitors inflation and other statistics. As a department in the Monetary Policy Department, do you also monitor inflation? Because number one mandate is ensure monetary and price stability. So do you have a mechanism whereby you also monitor your own inflation, but you leave it for MBS to talk, to announce? And are both of your statistics or data almost the same, or you know, you do your own stuff too? Because I know you also publish, I need to say it here, you also you have your publications on understanding monetary policy and all of that. I think you need to do more of that so that people can know, especially those that are doing research and all of that, should go get those things.
Okay, let me start with the first one, whether we monitor banks and get this number on
a daily basis,
regular high frequency. Yes, we do. We have a rendition platform, and technology has helped us a lot. You know, every day that the bank closes, central bank sees there's a rendition platform daily. You know, and we call it a FINA platform. Yes, that is where banks, you know, and in that platform we have a template. It's a huge data bank. Various templates, Naira, FX, deposit, lending, everything that is going on, payment back to the banks, you know. So in those templates, there are also ratios and calculations at the end of it. So when you put your numbers there, time series, at the end of it gives you calculation.
A percentage.
As at today, so amount was lent out. This is supposed to be recovered. This is the volume that is recovered. This is one that is not recovered. The percentage comes out because you call it MPL. Okay, from terms of your total capital requirement, we call it capital adequacy ratio. This is your shareholders' fund. These are the funds that come in. These are the loans that come in. We have tier 1. We have tier 2. You know, tier 1 is the one that is more solid within the system. So all those numbers come out. You see the total qualifying capital. You know, so you know from those numbers what is happening to the bank. This bank is trailing downwards.
You don't get
there are signs, yes, K leg, they come, or the leg is about to be K, or this bank is doing very well. Okay, if it's doing very well, which area is he doing well? Is he doing it the right way? Is he doing the wrong way? What are the earnings of the bank? So we have those renditions, and like I said, those ratios, they come out on daily basis. You know, at the end of the month, at the end of the week, we do averaging. You know, because there are some weeks something can just, or some days something can just happen abnormally, maybe operational risk or something like that will happen, and you see one number behave abnormally. But by the second, third day, they've moderated. So if you take more weekly or monthly average, you start seeing some smooth number. But when you start taking weekly and you see a particular trend, you know that, yes, this is an underlying factor. So in terms of getting those numbers on daily, yes, we do. On the side of inflation, the authority allowed by Nigeria government to collect the numbers for inflation is MBS. because inflation numbers that they compute, we have what we call the composite price index, and you have the baskets, you know.
Yeah.
So basket, they selected some certain goods and services which they put in that basket, and use those goods and services, 50 or 60 of them, use them to predict or get a picture, you know, a population sample, get a picture of where the prices are going. MBS has offices in all states of the federation. They have statisticians and officers, and they have field workers that go to these places. They have urban, they have rural. What is the price of yam? What's the price of beans? What's the cost of transportation? You know, both the formal and the informal sector. You have that coverage. So statutorily, they're the ones allowed to compute those numbers. Whatever central bank does, and even the Federal Ministry of Finance, you know, as overseer of the economy, in terms of the resources, the manager of the resources of the economy, is the Minister of Finance under the presidency. Also has targets for what they want to achieve. If the government comes, has a level of employment it wants to achieve, a level of price they want to achieve, so they will tell the central bank, this administration or this government wants to achieve so amount of inflation within the economy, so amount of this. They have their projections because they have their plan, they do their budget.
GDP growth,
did everything.
inflation target,
so they give you
that.
those numbers because they employ you. So this is what I want to achieve, you know. But they don't give you those numbers on their own. They sit with you. Which one can you do? Which one can you not do? What are your constraints? So it is not like they just decide, you know, arbitrarily on that. There's this MTF that they do where you have engagement.
Medium-term expenditure framework.
Thank you.
Yes.
Where you do that
MTF.
and you have those engagement and you go back and forth. National Assembly also comes in and look at, you know, the numbers. So the inflation monitoring side of it is the fact that if you are given that target, then you need to be monitoring that you achieve that target. So that is where central bank comes in. So how do we monitor? One, if the inflation numbers, you don't have a control of how the inflation behavior is. There are many factors that affect inflation. What central bank does is to look at the drivers of inflation.
And control it.
Yes. So the ones that are within your purview, you control. The ones that are not within your purview, you liaise with those that will play that role to get that. Listen, other things that is being done around inflation is that you also forecast the inflation. So you take action. It's not when it happens that you start. So in the central bank, in the monetary policy, there's the division dedicated to forecasting inflation, looking at what inflation be in December,
That's why I
in
asked
January.
that question.
Yes, there is. There's deliberately looking at those numbers. They use models, econometrics models to look. Given the trend that is coming, where are we going to go? But those forecasts are based on assumptions. If oil price still remains this, if GDP is going this, if there's no any external shock. However, in the event that other things happen, they also do that forecast. They call it simulation. So you said, okay, what if oil price goes to $20 a barrel? What will happen? What will be inflation in 4 months, in 6 months, in 1 year? So you start looking at that. So when those things happen, your ability to adjust is a lot more flexible than when you just sit down and suddenly nothing happens. Most economies around the world, by the time Russia, Ukraine were arguing and European Union, NATO, they're already taking position. In case this thing happens, what's our position?
And it did happen.
Yes, and it did happen. But those that were preparing already had, okay, in the event that next year this war happens, let us start alliance with this person. Let's start alliance for the supply of wheat, for the supply of rice, you know. So those that were sitting down thinking that it will never happen were shocked. And they are paying well, we also planned. We also we also saw it coming. But there are other European economies that never, thought of it, and they are stranded now. Because Russia is just cutting off. So inflation monitoring takes place of very high frequency. So that's why if you do MPC meeting, we say economic outlook. So we have external projections from external development and all that, GDP growth. So we have forecast for that.
So it's good you answered this question, because at the end of the day, when that communique comes up, these are the things. We just explained how that communique comes about. So that means that you do your work on a daily basis. There must be a lot of economists and CBN, statisticians, and co.
We have loads.
And your department has a lot to do.
A lot.
In terms of like
PhDs in 40s, 50s, PhDs in central bank.
Oh.
Yes.
Okay.
So
Okay, Dr. Mahmud, just as we close, any other thing to say? Because it's like, have we exhausted this topic?
One thing I want to wrap up with is the importance of what you're doing now.
Okay.
You know, communication. In short, when I mention monetary policy tools, communication is one tool that has come to play now. Because communications allow people to understand where you are going and know how they will behave in that space. Because they are also beneficiaries. You know, nobody sits down to crush the economy because it will gain. If you gain, it will be temporary. At the end of it, you pay. So for us to be able to communicate with both the investors, the operators, the people that will regulate, and the rest of the economy, it's very, very important. Because, because it allows them to behave in certain ways. So communication is very key, and we hope that we'll continue this process of, you know, enlightening people of what we do.
Okay, I hope we'll continue,
We
because
will.
it's a mandate of this show too.
Yes.
You know, education and enlightenment. Thank you very much for coming. No other questions apart from this education and enlightenment.
Thank you very much.